Hey guys, it's Will Rich. Hopefully you're having a great day today. In this video, we're going to go over APLD stock, a company that specializes in data centers that most investors aren't even paying attention to right now because they're focused on the GPUs, AMD, NVDA. They're probably looking at some of the top AI companies that are on the front lines, but maybe not the infrastructure that's building the ability for AI to function as a whole. And APLD has seen some growth recently. We could take a step back, kind of look at how we've covered it. We've seen it surge up into this $15 range recently. And we're going to break down the three-step process that we go through of the market, the analysis, and what profit potential or risk is associated with the company now. If you guys enjoy these types of videos, investing in AI stocks, quantum computing, space tech, and much more, make sure to subscribe down below. And if this video gets 150 likes, then we'll go ahead and have our live session for StockMate, where we trade live every morning at market open. It will have a sample session tomorrow, Friday, if you'd like to see how we trade in the markets live. And if you want to just jump on in, get a free t-shirt, it's the second link in the description to join us there at market open. So let's jump into APLD. The first thing we know about APLD stock, if you're not familiar with the company, is that they are building data centers for what could be the future of a lot of the AI companies we're seeing now. They recently signed a deal with Coreweave that's about 9 billion or 11 billion now. It was 7 billion initially, where they're building data centers out in North Dakota. Now, there's a really funny thing. People think, Will, where do you find these stocks? Will, how do you get these insights into different companies? And a lot of times it comes from you. So if you have any thoughts, comment them down below. One of the interesting thoughts we had recently was from one of our subscribers who lives in the town or right next to where these are being built in North Dakota. And he was saying, they're building a lot of data centers out here. And not only that, there's a lot of wind turbine, a lot of energy out here. And it's a pretty good market to be in. And they're constructing them pretty aggressively. And it was just the day before yesterday when they signed another $3 billion deal to build this data center for a national AI infrastructure leader. Now, I don't know that they mentioned the company. They say it's a 3,280 megawatts AI factory near Harwood, North Dakota. And it's designed with the ability to scale beyond its initial 280 megawatt the campus with initial capacity in 2026 and reaching full capacity by 2027. It's the Polaris Forge 1, which is an AI factory model that outlines site selection, cooling design, so they're in a very cold place, which is part of their focus. And they also build data centers. They're construction, right? They build actual data centers. They're not making GPUs, they're not making microchips, they're building the place. And they're doing it in a way that they compare here traditional, how they used to build them versus how this company, Applied Digital, builds them. In the past, traditional data centers, what do you have? You have large physical footprints, probably not that efficient, probably using a lot of the grid energy, higher carbon footprint, probably air cooled, so not that efficient. But then you have APLD. They're going liquid cooling. They strategically place them near renewable energy sources. And the space utilization is compact and they have a low carbon footprint. So this is kind of how they do it. Wind is a big deal in North Dakota. And that's something we'll see as a focus there. And also you see solar is something maybe they could expand into more there. But you might look at them and say, okay, that's great. Where's the revenue? We'll get into the financial. Supermicro Computer is a partner. You got NVIDIA, Dell, Intel, and many more. When we look at the institutional buying, that's one thing to watch, but we'll get into it in a second. But what you could see from a revenue perspective hasn't really hit their revenue yet. Annually, they're seeing increases in revenue up to 150 million. And then that's all great, but that net income is a little bit lower than we'd like to see it, around 52 million negative there. the balance sheet, you could see increasing quarter over quarter and now up to all-time highs in 2025 of about 1.87 billion in total assets. So a hunch here is that they're expanding their assets aggressively to be able to fund more data center builds aggressively. And they've done that pretty well. The only thing is their liabilities are still kind of high. I don't know if that has something to do with materials or maybe has to do with the a lot of construction companies or real estate companies oftentimes have higher liabilities than, say, a software company, just because there's more infrastructure involved, and that's part of the game. But ultimately, can yield very long term and can position them as a large cap stock. And so right now their market cap's at 4 billion. We've seen some of their deals come in around 3 billion to 10 billion dollars. Some of the targets for the stock, which we don't like to look at, but I mean we could pull it up really quick. APLD targets. Let's take a look. Most of the news is pretty kind of hype, so watch out. You don't really want to dig into these articles. I always just say go straight to the source. But you do have some notable forecasts of about $15 to even some projecting up to $20 a share for the company. Some are a little more bearish, but overall it's bullish from most targets. Now there are some lower targets, but those are back in February, April, which they've already kind of crushed. And so you might say, all right, well, it seems like they're in the right market. Seems like they're doing well. What about the institutional activity? Well, we've seen just from a institutional perspective, some of the big banks that are buying. You got BlackRock is there, definitely seeing more increased positions. As you see, Vanguard is there, and you can see decreased positions only 136, while increased positions are at 175. So kind of indicating more of a buying frenzy than that of a selling frenzy. And then you have State Street, Goldman Sachs. If you kind of go into it, you'll see most big tech company or big banks. You got Citadel, JP Morgan Chase is there investing in the company right now. So that's kind of where they're seeing more institutional buying, kind of an indicator there to watch pretty closely. Now let's get into, we went over the market, kind of got an idea of a sense of their news and the different deals that they're coming out with, why their products preferred in the marketplace, and big tech is selecting them as their constructor or the contractor. What is the profits looking like? Well, let's take a look at the risk. We've seen them. I think we even have some charts that we had mapped out yesterday or maybe the day before. We saw them break up into this level here. So we started covering them late 2024. They must have been, I don't know, somewhere around $5 a share. We saw them make it up to 12, sell back down to 3, and then rocket back up to 15. And we've seen them up in this $15 range now. And by June, they've kind of been establishing this $9 to $15 range and holding above it since August. And if we kind of get down into the shorter time frames here, last time we did a projection, we were looking for a bounce here. I know it was aggressive. It sold down pretty hard and people were kind of freaking out the other day when the market corrected. But I was saying they're at this rising support level. They got a support there at about 13.50 to 14, and we're pretty heavily invested in it for the long term, but we also want to trade it in the short term. So we trade this stock very often, and we love to trade it because it offers a lot of consistent patterns. And when it signals more of a bounce on that 200-day moving average, and we see some of the deals working in our favor, just from a probability standpoint, those shorter term trades have been pretty lucrative. So we do see it actually bounce as we kind of projected yesterday. It didn't make the 20% bounce just yet, but at one point it recovered about 15% and kind of pushing up today about 0.29%. Now, some stocks were selling off today. I think APLD is up there, and they're up while most, I think, for the most part, we saw some corrections today in the market. We saw BBAI was down, maybe a little greener towards the end, but SPY was down about 0.3%. So we traded SOXS. We ended up buying the inverse of the semiconductor market for a short-term trade this morning to hedge. Ended up in the green so far. It's been going well, and we'll continue. We'll be continuing to monitor there. But again, for the bullish plays, which we love to play here for APLD, short-term, you got a resistance around $16 a share. So to watch kind of that level there at $16 a share, something like this. And when we see a break above, or depending on what we see at market open tomorrow, or towards the end of today, kind of give an update maybe on the end of the day, how it reacts to the $16 level is going to be key. Next level that they're going to try and hold would be around $15 a share, $15.20, as that's a previous resistance. Previous resistance oftentimes will act as a support level. And so in the shorter term outlook, we do see them double bounce there on that 15.20. It's been a resistance there, and maybe they can hold there. And we're going to watch this $16 range to see if they can really make something of a move, more of a breakout, kind of using previous resistance as a support is going to be a bullish trend. And that would be more of a 5 to 10% margin for profit in the near term. Now, the long term looks pretty promising. I could see them as a pretty good play there. Short term volatility is expected. So I do urge caution. Monitoring the levels on if you're in a shorter term trade is really important. Having a plan, regardless, being able to adjust if it doesn't go according to plan. It's going to be how you're ultimately going to protect your gains and make sure you're growing your account in the long term. So if you guys want to join us in our daily live session tomorrow morning, we do have a special offer in the second link in the description for stock mates. So I would love to see you there. I do call every member and you get a free t-shirt if you want to join. Again, second link below, and that's ending soon. So you probably want to get in if you don't want to pay a subscription. You want to get lifetime access to our daily live trading. And if I earned your thumbs up, guys, make sure to hit that like button. Again, we'll do a live session for free if we get that 150. And then do consider subscribing if you enjoyed. And I'll see you in the next video. Take care.